Great, thank you. Well, now I'd like to invite to the podium Carissa Christensen, CEO of Bryce Tech, who will be moderating a very exciting panel on investments in the space industry. Carissa's been with the foundation, I think, from the very beginning, so we're super grateful to have you here. And as always, we're looking forward to a great panel that you've put together. So thank you, Carissa.
And if I could invite the panelists to come up. What a pleasure it is to be here. This is one of my favorite events that I speak at. I speak at a lot of events. I really look forward to this because of this audience, because of the extraordinary young professionals that attend this event. And I want to give you a little bit of a sense of how this process goes. I met Brad at an event that I guess he was invited to. He may have wrangled his way in when he was a graduate student. And now his company is managing the capstone mission for NASA. It is extraordinary to see somebody go through that process and professional growth. Welcome. It's wonderful to see everyone here today. So I'm Carissa Christensen, and I'm from Bryce Tech. Among other things, we produce studies and reports on the space industry. And I'm really looking forward to talking to you today and having our panelists talk today and taking your questions today about what's going on in commercial space, particularly with regard to investment. So let me give you a quick framing, some framing notes, some data, because I can't help myself. And then I will introduce our extraordinary panel, and then we'll get into content. So the space economy is kind of dominated by some mature industries. The satellite industry, television, for example, GPS products and services, and revenues from those industries have been pretty flat over the last few years. Lots of growth and productivity, but not a massive increase in top-line revenue. What has changed, because certainly what you've been reading in the news is not space industry stagnant, it is space industry transforming. So what's been driving that transformation is investment. There's been a huge influx of capital into space in a number of different forms, from increased government budgets to corporate investment to a really extraordinary phenomenon. Starting in 2015, venture capital, angel investment, some super angel billionaires, started putting money into space at a very significant rate. A couple of $1 billion in 2015. It's been 40 billion, more than 40 billion since then. 2021, $15 billion of venture investment. And venture investment is different. It's risk tolerant, and it's looking for transformational change in the businesses that it funds. So we're at a point now where we've got a bunch of companies that have started, almost 500, 1,500 investors, and they're growing, they're generating some revenue, but nobody's really changing that top line yet. They're not generating a huge amount of revenue. They're in a growth and maturity stage for the most part. And we're in a world where capital is likely to become less available as we see a global financial change. So the question to our panelists is, what does that mean for all of these space companies and for the future of innovation in space driven by investment? So that's kind of what we're going to talk about. And boy, do we have the right panel, because we have here people. So I'm lucky enough to analyze what goes on. We have the folks doing the deals here. We have Rob Meyerson. Rob has a ridiculously impressive resume in the space community, including NASA, leadership roles at NASA and Blue Origin. And Rob has worked with a venture fund and is now running Delaloon Space, which he founded and is the CEO of, which he is the CEO. We have Tess Hatch. Tess is a partner with Bessemer Venture Partners. Bessemer is a Silicon Valley-based VC fund that is one of the most active and knowledgeable space investors. We have Phil Engel. Phil is with Morgan Stanley. He's a managing director in Morgan Stanley's investment banking group. Phil really connects the dynamics of kind of traditional investing, which wasn't as focused on space, all areas of space, with the change in the space investment community recently. And so really, I think, helps us understand how Wall Street views investment in space. And last but certainly not least, Randy Siegel. Randy is a partner with Hogan Lovells. Randy is an attorney and an expert in making deals happen. So she's working with clients to go through the mechanics, to go through overcome the barriers of cutting those deals and putting those agreements together. So that's our panel. I think you'll agree, well suited to talk about this topic. So let's start with, from each of your perspective, what has this surge in investment meant for you? Has it changed your professional landscape? How do you think about commercial investment in commercial space? And Rob, maybe we start with you and work our way down the panel.
Okay, push it once and it's on. Thank you, thanks Carissa. Really a pleasure to be here today and appreciate that introduction. I think this huge investment in space over the last really decade has really, the first thing, it's driven down cost of space access 50 to 90% by most measures through reusability, through competition, through rideshare. Coupled with the reduced cost of space, satellites and components. So that's one thing. The investment has also served to rebuild the defense industrial base, which really struggled from significant consolidation over the last 30 years. So seeing, smaller companies come in, that may or may not get acquired, or maybe they'll become the acquirer in the future. It's exciting to see those, those new companies coming in. The new tools that are available to founders, including all that private investment that Carissa talked about, but also SPACs. In addition to the leader of Delaware in Space, I'm also the CEO of C5 Acquisition Corporation, which is a live public SPAC, which is out in the market right now. SPACs are still a good option for founders in certain situations, and I think that especially with the market tightening the way it is, traditional IPOs not being available as they have been in the past, and private money sort of tightening up, the SPACs can be an option for the right kind of companies. So I think that those things are something I wanted to focus on, in addition to the fact that the government is always there. The government is a very, very important customer for space and defense, and it's always going to be there. The last time government budgets, took a significant, decrease is before my lifetime started. So, I expect government budgets to be flat or increasing over the coming decade to support future growth in space. So,
Thanks, Rob.
Yep.
Des?
What this surge in space investment means for me, it means I still have a job as a space investor. And my partner at Bessemer, Lori Garver, who I have the honor and pleasure of working with, and I still get to work with Rocket Lab and Spire, our two space portfolio companies. But I'd love to double click on why the surge in space investment. And something you said in your introduction, Carissa, that I found really interesting was in 2015 till now, there's been 20 billion, 40 billion?
More than 40.
More than 40 billion. I got that number wrong. So why 2015? Well, I'm going to rewind. In 1998, the invention of the CubeSat really lowered the barrier of entry to space. Before this tissue box-sized satellite, the size of a tissue box, the only way to get an asset into space was a massive school bus-sized satellite that would take years, if not decades, and hundreds, if not billions of dollars to design, build, test, and launch. And this invention of the CubeSat, very small form factor, cheap commercial off-the-shelf electronics, really opened space for business. Entrepreneurs, students, people flocked to this new form factor and launched into space. And 4 Stanford students thought, what if I put a camera on this tissue box and threw it into space? And a company called Skybox Global in 2010 was created. Bessemer Venture Partners, Coastal Ventures, a few other firms invested. We were the first space investors in space. Most venture capitalists invest in SaaS software. And 4 years later, we sold Skybox to Google for $500 million. 4 years later is 2014. So in 2014, every other venture capital and Silicon Valley firm, their ears perked up and they're like, 4 years later and $500 million? That's a really good return on my investment in a pretty short period of time. What's this space thing? Kind of sounds like SaaS. every venture capital firm, most venture capital firms, went out and started investing in space. So I'm going to say that's probably a leading indicator and a big reason why $40+ billion went into space. Now, hey, SpaceX was also very helpful along the way in parallel to Skybox's exit in terms of being a very high-valued, lucrative business. 2014, 15, 16, 17, 18, 19, I would stand up here on these panels and I'd pound my fist on the table saying, we need more exits. We need more liquidity events in the industry. Randy's heard me say that on every panel. But since we've last been on a panel, last year, we had a dozen of those. We had a dozen space companies go public via a SPAC. I will save comments on SPACs for the next question or 2 questions from now. But we have those exits in the industry. That's where we're at the moment. We have a handful of exits. How are they doing? To be determined. We'll discuss in a second. I get to keep doing my job.
Fantastic. Thank you, Tess. And the whole group is now, you can see everybody kind of vibrating because there's such interesting topics on the table for us to talk about. Phil, how has this changed your professional landscape? How do you view, and the broader landscape, how do you view this surge investment in space from a Wall Street perspective?
Yeah, look, from the Wall Street perspective, if you think about space, going back 3 years ago, and in Tessa's world, in venture capitaling, there was a market for people to assess companies, to invest in them, but that wasn't really available to Wall Street in terms of Fidelity and the big T. Rowe and other long-only funds, because their business is investing in public companies, and there wasn't really a public company option to invest in a pure-play space company. There had historically been, 1 or 2 companies. One was a business called Orbital, which merged with ADK. But as Rob pointed out, there was a lot of consolidation. And 2 years ago or 3 years ago, if you were a Wall Street buy-side firm, the only place to sort of quote-unquote play space was to buy shares in Lockheed or shares in Boeing or shares in Northrop or shares in Raytheon. And a lot of those companies, space is a super important part of their business, but it's a small piece of a larger pie. What changed on Wall Street was the comment that Tess made, which is now there are pure play ways for investors to invest in pure play space companies as opposed to investing in a defense contractor that has 10% or 20% or 5% of its revenue that's space. We saw 12 SPACs over the last 12 months, so there's 12 pure play space companies. There was also the first traditional IPO of a pure play space company last year, which is a Canadian company called MDA. And now what you're seeing is investors, those Fidelities and the T. Rowe's and people like that, being able to look out and say, and make an assessment. I like space. Space is interesting. There's growth here. There's a market here. There's a place to make money. And now I can look and say, of these 12 companies, which ones are interesting, which ones are not. And you couldn't do that before. So that's really, Carissa, the big change, over the last 24 months, is this emergence of a way for Wall Street investors, as opposed to just venture capital firms, to go and put their money behind, which ultimately means signaling, which ultimately means potentially more capital in the form of primary for companies to go and access, raise, and build out business models.
Thank you, Phil. So, Randy, nobody better to ask this of, as you talk about your view of how this has changed, the surge of investment in space has changed the world, just because we have an array of different professional backgrounds, can you make sure everybody in the room understands what a SPAC is? You're the right person.
So there have been waves in the financial community of this shortcut to becoming a public company. So the initial public offering is where a company gets itself out there and sells itself, full stop. It's a simple, not that simple, but it's a simple, I'm going public, here's my story, here's my disclosure. A SPAC, a special purpose acquisition company, is a situation where people set up these vehicles that have sort of a form that has morphed a little bit over the last year because the SEC has gone after certain elements of it. But it's been a certain cookie cutter type of arrangement where you have a purpose for what you're going after. You don't have a business yet. You have smart people in the industry, that are supposed to be respected, and that's why they're on the board or the CEO of the SPAC. You go public as a SPAC, but the money goes into a trust, a trust. And then there's certain formulas as to how much the stock should go to the market with at $10. There are warrants that you receive, which is the ability to get a stock at a set price in the future. There are things called lockups. And then there's the ability to redeem your stock in this SPAC structure. And then they marry up with, they find a merger target that they think is attractive. So for example, we had SPACs in the 2011 timeframe, those 12 that are being referenced, where you had Astra or Momentus or Rocket Lab, maybe they were the year before. You have Rocket Lab, you have a whole host of companies that the SPAC, that this trust with money does a merger agreement with these operating companies, and they become one, and the money that the SPAC, you back into an IPO effectively. And it's supposed to be quicker and less regulatory scrutiny, and it's been an easier method. It became mainstream in 2021. There were a handful in 2020, and then 10 years before, there were more that happened as well. But it kind of comes and goes based on the market receptivity and the SEC perspective. So that was last year. 2022 is a dramatically different year than 2021. 2021 and 2020 for the space industry shocked so many of us, because here we were in the middle of COVID, yet the space industry never did better than it did. After a few months of a hiccup where people said, what is this going to mean to supply chain? What's it going to mean to the business? Space industry just kept going, both in terms of financing into the space industry as well as transactions and efforts for the space industry participants. So it was booming years, 2020 and 2021. 2021 was the year of the SPACs. I will show my age. I've been in this industry for 30 years. And going back before the last 10 years, as Tess is talking about Bessemer's investments, when I was with space companies, I had one private equity shop that chased satellite deals. You know, and that was only because they understood spectrum, and that was the key to a lot of their space deals was spectrum. And just the same way terrestrial and the auctions with the FCC, spectrum is king. And spectrum is king, by the way, in 2022 as well. A lot of constellations are not only trying to build a constellation and get money, but spectrum, they're trying to get spectrum for the constellations, which is a real challenge with so many people with novel constellations and activities they're doing looking for more spectrum. So in 2015, it sort of all came together, as Tess said. The form factor, the cost before you saw a nickel of revenue went dramatically down for the CubeSats, and how much it cost. Used to have a launch that the cheapest cost for a launch was $100 million for a launch, and it had to be a dedicated launch, and there was no such thing as shared launches. Now, people can do on a fraction of the amount in a shared launch on a SpaceX, on an Indian launch, on a Rocket Lab launch. You can now launch for a fraction a CubeSat or a flock of CubeSats. It's changed entirely the whole industry. And all the other efforts for technology have seemed to come together in the last 5 years as well, whether it is human spaceflight, whether it is commercial space stations, whether it's lunar everything, whether it is fusion activities, robotics, everything seems to be coming together at the same time. So as to the money in the industry and the VCs are seeing this much like a software product, less risky, and that was never the case. People didn't understand space. You could launch a geostationary satellite into space, and if it exploded, which was not an insignificant possibility that it could fail and explode, you lost your whole business and you were set back another 3 years to 4 years if you even ever got into business. Now, these little CubeSats that are being developed next to an engineer's table or somewhere else is like an assembly line. It's a totally different type of world. It is much more like software, people viewing it.
Thank you. So I want to, before I ask the next question of the panel, I want to speak to all of you. If I had been at your age in this audience, I would have been thinking about this as, this is an interesting phenomenon in an industry I work in. I wouldn't have been thinking about it personally. And I wish someone had said to me then what I'm going to say to you, because maybe I would have started my first company when I should have 15 years earlier than I actually did. You are the founders of these companies. You, this cohort, this group, this expertise, you are the people who are going to be starting the next round of companies, building companies in this industry. This is not a story about others. This is a story about you and your peers. So from that point of view, panel, tell our founders, how do they succeed here? We are in an environment, we've had a lot of companies start up, a lot of companies grow, not so many of them generating a huge amount of revenue, not so many of them generating large exits. We had our SPACs and so on. Those SPACs are trading at, their share price has dropped. There's some challenges and some of those. So what's the path to success as we go forward? And Phil, why don't you start us with a path to success, and then Tess, and then Randy, and then Rob.
Well, first of all, I think the key thing is the path to success is there's no shortcut. You've got to work hard. You've got to be in it for the long game, is the first thing. You can't jump from here to there to there. You've got to stick at something, and you've got to stick at it for the long term. People keep telling me I'm not an engineer. Space is two things. Space is hard and space is expensive. So there are no shortcuts. And to put that in perspective, in terms of what's going on on Wall Street, if you look at the 12, space companies that are out there, there are a mix of, companies that are going to be successful, companies that may not be successful and, may not make it. And then there are some other companies that, have interesting business models, but may not be able to get the capital, and so they may end up getting merged with other companies, et cetera. I think that the absolute key thing, though, to the companies that are going to be successful is that they're focused on execution and they're focused on a long-term plan. And, even though there are going to be, in your career, and Carissa, I agree with everything you said, this is the future of space leadership. There are going to be periods where the market's going to be hot, money's going to be cheap, money's going to be available. Doesn't mean that you should certainly take advantage of it if it's their capital, but that's not going to create shortcuts. At the end of the day, Wall Street, venture capital firms are buying mostly leaders and people with vision, but also people with plans. And it doesn't matter how much capital you have, if you don't have the right leadership, you don't have the right plan, you're not going to make it. And so my key message to you is whatever you do, play the long game, and be prepared to stick at it and stick at it consistently, because I think most industries there aren't any shortcuts, but I can tell you what, with space, again, given how capital intensive it is, given how hard it is, there absolutely are no shortcuts, and I think you're going to find that that's what's going to separate a lot of the successful, whether they're private, whether they're public, whether they're private or public in the future, space companies from the ones that aren't.
And I will also warn you that once you get in the habit of starting companies, you don't get out of it. Once you go down that path, that's your path. So Tess, what's the advice? How do we make
the future founders or founders in this room? Find the intersection of your superpower with a really, really large problem that needs a solution that your superpower enables you to be uniquely positioned to solve. And I am going to use two examples of folk who did this really well. Peter Beck, our founder and CEO of Rocket Lab, and Peter Platzer, our founder and CEO of Spire Global. Yes, they're both named Peter. Mm-hmm. Peter Beck had been playing around in New Zealand in suborbital rocket launches, so making a parabolic trajectory, not totally escaping Earth's velocity, but for experiments, and for decades he had been doing this. And he noticed, due to the invention of the CubeSat, there were all of these secondary and tertiary payloads that weren't perfectly optimized for existing rockets. Existing rockets were United Launch Alliance's Delta, Atlas, and Vulcan, SpaceX's Falcon 9, which really did dramatically lower the price of rockets. Even India's PSLV, Russia's Soyuz, all of these rockets were designed to take the school bus to GEO, 36,000 kilometers away, not the CubeSat to LEO, 500 kilometers away. And he thought, hey, I've been doing this, suborbital rocket thing. Due to the invention of metal 3D printing, I think I can design an engine that, if I use this metal 3D printing to inject the fuel in the combustor in a special way, I can produce enough thrust to escape Earth's velocity. That was his superpower. He found this problem. 7 years later, 27 launches, or was last night 28? I don't know where Andy went. 28 as of this morning. 147 satellites, but now it's probably updated. Now I'm really testing you. 148 satellites later, and an IPO. Peter Beck found his superpower and a really massive problem in the industry: the invention of the tiny launch vehicle. Peter Platzer. I'll be quick this time. He was noticing everybody putting cameras and communication devices on these CubeSats. How many constellations of satellites are taking photos of the Earth and communicating with the Earth? We've got a lot. And he thought, what if I listened to the Earth instead of taking photos or communicating with? And Spire Global now operates the largest general-purpose CubeSat constellation with sensors for aviation, maritime, and weather monitoring and predicting. So he was at ISU, he met some people, he found this massive problem where the Earth doesn't have better information about its weather. And he, 6 years later, is now uniquely positioned to solve, also went public. So I think these are really interesting examples of both of these people were at a very unique time where they located a problem that really went well with what they're really good at, and they solved it, and they have lots of people paying for that solution.
And if you're concerned that you don't have the right personality to be a founder, Tess's anecdote should reassure you, because Peter and Peter's personalities, opposite ends of the spectrum.
Yes.
Opposite ends of the spectrum, both hugely successful as founders. Randy, what's your advice for our founders?
So this is why Tess is in the job that she's in and I'm in the job that I'm in. I do not have that vision to know what is going to be my superpower or anyone else's superpower that they're going to translate into the winning, successful story. They're small sats. I have no idea which small sat launcher is necessarily going to be the one that would succeed 3 or 4 years later and be at the finish line. I know which ones may not, because I think that the folks at the helm are not capable, or I think that they're cutting corners, or I think that it just doesn't make sense what their niche is, but I can't tell across the board. So when you start off with a funnel like this, and you can talk about a lot of people, whether it's Bessemer, whether it is In-Q-Tel, whether it's anyone who's investing in the market, they go after similar type things with a variation based on what their investment profile is, with In-Q-Tel being more government and looking government and commercial, and Tess looking to just have things that are going to make the highest multiples probably for their fund investors. But if you look at it, everyone's looking at who the right team is. Is this the team that's going to be successful? Is this the team that's addressing a market problem that has a great base for, that there'll be profit for, that it'll resonate with the marketplace? Is this something that is technically feasible? Are they going to be able to do it, or is it on the too tough category? And is the cost of the capital expenditure too high and someone else is going to do it better, quicker, or otherwise on a more cost-effective basis? I can articulate this to you guys as to what you should be thinking of, and also thinking of surrounding yourself with great people, great team, people you can trust, hardworking, people that add to your skill set and fill in the gaps that are not your superpowers. I love it that Tess used the superpower type of concept, because that's what I talk also. Each of us has different superpowers that we're really strong in, and what's important is to match yourself up with people who fill in the gaps that are not your superpowers. Do not be intimidated if this all scares you. to think about finding something that you're going to be a home run success the first time with. You may well fail. I don't know what the statistics are the first time out with failure, but there's a lot of great quotes. I forget if it was Einstein or Steve Jobs or who it was, that if you don't fail, you're not trying, you're not taking enough risks, and you're not trying hard enough. And so don't worry about it. You'll have some superpowers, and just keep trying.
Thank you, Randy. All right, Rob, you're in the middle of it right now. What's your advice?
Well, I spent 15 years leading Blue Origin, so I know a little bit about patience and long-term thinking. And so I totally agree with the points that were made, especially with Phil in terms of being patient as a founder. It's going in and building your company, building your revenues, but also I'll go back to my first answer. The answer to the first question is the government is a really important customer, an anchor customer. So if you're a founder who's thinking, I don't want to work with the federal government, that's not an important part of my business, I think it's a huge mistake. The federal budget, the federal government is here. They're taking on space. We have a new space agency and a space force. They have a growing budget. NASA has a program of record in Artemis that's going to continue for a long time. So, and I think it's really important to think about government. I think the second piece of advice I'd give founders is about choosing your VC partner for your private funding. I think VCs are going to continue to invest in early stage. Don't focus on valuation. Don't focus on, those are important things, but focus on that partner that can get you to the next round and the round after that, who's going to be with you. So check references, just like you would in going and buying a valve. Make sure you do your diligence in that selection, because that person's going to be with you for a long time.
Yeah, two things. Firstly, to Rob's point, there will not be a successful space company anytime, certainly in the near future, maybe down the road, that doesn't have government as, an anchor customer and an anchor part of its business model. That's an absolute fact. And a lot more smarter people than me on Wall Street, have that view, and they're the ones that are investing hundreds and billions of dollars on behalf of 401ks and clients like that. So Rob's absolutely correct on that. The other thing, lastly, Carissa, in terms of advice, given how hard space is and given how expensive it is, it's not an industry. There are other startup companies, social media type businesses that you can tinker around on your own in the basement and come up with a product or solution. You can't do that with space. It takes team. So I think one of the great things for all you in this room is you're here at a conference like this or at an event like this, and there's obviously the grantees. And I know you all go to a lot of other conferences. You're all involved in other bodies. The networking that you can do amongst yourselves and amongst your friends and colleagues, in government or other private companies is absolutely critical. If you think of those two stories that Tess talked about, Peter Beck, for example, was in government and had, and then Peter Platz's comments that Tess made. A lot of what he, in terms of the solutions, they wouldn't have known about the problems. They wouldn't have thought up the solutions if they didn't have that network effect and talking to their colleagues and partners and other people in the industry. So I think that's a super important part of you guys, maintaining all those networks that I know you already have and you're going to build going forward.
Peter Platzer met his co-founders, Joel and Jeroen, at ISU.
Mm-hmm. I have a long list of questions because I can talk to this group forever, but I'd really like to take some questions from the audience, if we have any, on the broader trends in investing in commercial space, on the dynamics of a particular subsector or aspect of it. Any questions at the moment? We've got one back there, and then I'll come to you, Chris.
Tess, you mentioned earlier that you had other folks on.
Why, thank you so much for providing me this opportunity. Randy did an amazing job explaining what a SPAC is. And I'll actually use a real SPAC as an example. Rob's got a bunch of cash. He has a SPAC. I have a company. We merge. We de-SPAC. That SPAC mechanism was not invented in 2020. It's always been around. Yet, and I'm going to approximate these numbers. In 2019, there were 50 SPACs representing about 30% of the IPOs that year. In 2021, that 50 jumped, sorry. Yeah, In 1950, in 2020, that 50 number jumped to 250. And in 2021, that jumped to about 650, representing 60% of the transactions that year.
Across all industries, not just space.
Across all industries, not just space. Thank you for the clarification. 12 of those were space SPACs. You can't spell space without SPAC. I'll pause for some giggles. Thank you.
You can't spell SPACilicious without space. Without SPAC.
We may just have to end the panel now.
Mic drop.
All right.
Back to what I was saying. That is a really large increase in SPAC transactions. Now, 6 months, 12 months, 18 months post those transactions, what's happening in the industry? Well, there's two scenarios. There are the SPAC transactions that are hitting their forecasted financials. Now, that's a big piece that I forgot to mention. The nuance and the difference between an IPO and a SPAC, they're basically the same thing. But the largest difference is that a SPAC can share long-term projections with the institutional buyers that make them particularly suitable for deep tech companies with ambitions to generate $1 billion in sales 5 years from now. Traditional IPOs cannot share future numbers with the street. That's insider trading. That's illegal. But these SPACs can. So now, 6 months, 12 months, 18 months post these transactions, what's happening? Well, the space or SPAC companies that are hitting the projections, they're trading great. You're forgetting that they went public via SPAC. The ones that aren't hitting their numbers, it's being deemed an insult. It's a bad thing to have gone public via SPAC. So the number this year for SPAC transactions, I think, is close to 50. Maybe Carissa knows the exact number. Massive decrease less. There's this whole nuance of pipes being clogged that Phil is much more educated to comment on, and we won't get into. Excuse me?
And rules changing.
Yep.
And rules changing with the SEC and warrants and restricting and regulation, et cetera. But it'll be very interesting to see next year how these two paths continue to diverge or what happens.
In other words, there's no shortcuts. SPACs are look. They've been around, as Randy and Tessa said, for decades, as exit mechanisms. They make sense, but as has happened historically in many different forms, that was abused and overused, and many companies that made a lot of sense to go public via SPACs did, but because of the overabuse, and part of that was fueled by just the dynamic of the market last year where there was too much capital, ended up where the marginal company that did a SPAC shouldn't have done a SPAC, and will revert back to sort of the 40 or 50 level as opposed to the 650. That's the sort of key takeaway I think you need to be aware of it. So I don't think SPACs are going to be dead and won't exist in 3, 4, 5 years' time, but we won't be having another conversation in 3, 4, 5 years' time about 650 SPACs. Just that.
I think also for the space SPACs, that long-term projection, I think there was some visionary bias, is the nice way I'll put it, over-optimism in some of those projections, and we're seeing the consequences of that, just as Tessa pointed out.
If I can add to that too, the SEC rules, the proposed rules, talk about underwriter liability, and so underwriters now, the bankers that advise these SPACs are forecasting. You're not going to be able to do this forward-looking vision. You're going to have to take this merger public without doing a 5-year forecast. So I'm not opposed to that. I'm supportive of that. I think that the SPAC is a great tool, along with venture financing, debt, borrowing from your mom and your family, or a traditional IPO or a direct listing. There's lots of different tools out there, and the SPAC is just one of them. And I think it's particularly well suited for deep tech, and as like Randy said, advanced fusion, advanced fuels, advanced reactors, electric vehicles, space, things that are super hard to do, and they need capital. So.
Chris?
So SPACs, but also in general for investment, I was curious to see if you have like a crystal ball perspective on how investment's going to stay the same or change with changing economic conditions.
Just a quick note on data, compared to last year at this time, we're significantly lower in total investment.
Let me anecdotally tell you what I'm seeing with clients this year as opposed to last year. A lot of my clients had their SPACs, had their transactions, had large BC rounds with VCs. This year is a lot tougher for all my clients. They have engaged bankers to help them do a strategic transaction, financing, M&A activity, and it's just a totally different world. And those who raised money with SPACs and whose stock price went out at $10 and they're now trading at $1.30 or $2 or whatever it is, they were going to use their stock. You know, that's one of the benefits of being a part of the public market is you could then use your stock for other acquisitions to grow the company. And the stock's not worth that much anymore. You know, you went out and after the 6-month lockup is over and after everybody trades in the market, even putting aside what's going on the global economy with Russia and Ukraine and inflation and everything else, you have just generally the fact that it's a different world, and the stock market's gone down generally. So a lot of these companies that have publicly traded stock, it's not worth they can't spend enough to buy what they had wanted to buy previously. So where I'm seeing anecdotally with my clients a totally different world this year than I saw last year.
I agree with all of that. I'm going to put my optimism hat on, but you're right. And in 2014, going back to my, not my crystal ball, the opposite of the crystal ball, but I'll get to future next, Skybox and SpaceX were paving this path for the 500 space startups to follow in their footsteps. 7 years later, in 2021, we now have a dozen other companies that broadened. They made our 1-lane highway a 3-lane highway. And as an investor, I am really looking forward to investing in the next, not 500, but 5,000 space startups that are potentially being founded in this room today. That will happen in 7 years from today. And that's my feedback cycle. Ideally, it's 3 to 5 years with my limited partners to give them back their money, but with deep tech, I get 7 to sometimes. 2014, 2021, you heard it now. 2028 is when I'm hoping we have another, probably won't be SPACs, but some sort of inflection point in the industry.
We look forward to 2028. We're
Call me.
all comfortably in the
accountable.
audience. You all are up here giving the talk, telling about those successful companies that Tess predicted. Just in service of networking and building connections, I should have asked you, Chris, can you introduce yourself to everybody?
Sure, yeah, Chris and I work for SPACilicious.
And our first questioner, can you introduce yourself? Nice to see you. And we have another question over here. Can you introduce yourself?
Hi, I'm Audrey Scott. I'm an intern at Ball Aerospace Political Development Fellows this year. So my question that I had is, coming from this investment perspective, is there any advice on what sectors of this industry you perceive as overcrowded? Something that we may be able to have in mind coming in and potentially helping our own companies in the future? And additionally, are there any sectors of the space industry, coming from a word that my manager used, a word, are there any sectors that you perceive as recession-proof?
That's a great question. So the question is, are there sectors that are overcrowded and are there sectors that are maybe recession-proof? On the overcrowding side, who's going to start with launch?
Please do not create another fantasy rocket. Please do not create another Earth observation, communication constellation, or space satellite propulsion company. And recession-proof, I'll defer to my esteemed panel.
Yeah, I would agree with that. I'd also, I just think, cislunar space, space domain awareness, space situational awareness, and then also lunar exploration, drafting on the Artemis program, I think can make sense in the long run. And also building on the infrastructure that's being invested in and paid for by others, commercial launch, small cargo landers in the CLIPS program, commercial low Earth orbit, commercial spacesuits, commercial communications. Think about it, NASA's kind of getting it, starting with commercial cargo way back when, and Lori's looking down. Thank you, Lori. You know, the great programs that were started a decade or more ago are bearing fruit, and we're seeing NASA getting it in terms of taking that approach. And future founders, you know, I think what's going to be recession-proof is building infrastructure on top of that base that NASA has enabled. So, and the venture community has enabled.
And I think it's interesting, Rob, that pretty much every market you listed has a major component of the government as a customer or a funder. We've seen defense space budgets over the last 5 years go up 10 to 15% a year, depending on what you're counting and what you're looking at. Civil space budgets have also gone up at about half that rate, which is still hefty. And there is an expectation of not necessarily continued increase at that rate, but continued very substantial expenditure to take on new challenges. So that's a compelling
Let me
view.
mention two things that have been elusive that I think, if we were able to tackle it, would be a home run. One is an Uber data, not an Uber as an Uber, but an overarching, capable data analytics tool that genuinely works for terrestrial drones and space and puts it all together and addresses all marketplaces. So we've had a lot of people attempt to do data analytics and put it all together. I don't think that we've hit nirvana on that. So that's one. And two is the ground technology, to get ground technology that can communicate with the satellite systems in a way that it fits your normal type of mobile phone type of form factor. We've had many people for the last 25, 30 years who've been attempting to have that cellular gap filler with satellites, and I don't know, and we have certainly had enough money put into the Amazon Kuipers and to the Starlinks, and where is that going to end up at the end of the day, and is that really going to supplement the way, I don't know if it will or won't, but I think that one of the great killer apps is going to be the ground, which has become the real key, and not the satellites anymore in terms of the form factor.
Thank you very much. And I'll take one final question, and then I think we're going to need to wrap up. I think we've got a question here.
My question was on the comment about government involvement in investing companies. I think there's a consensus in the Air and Space Force that our acquisitions process needs a lot of overhauling, and you see the fruition of AFWorks and SpaceWorks and this type of investment. But I was wondering, talking from your perspective, what do you think these startup companies need to learn, or what do you think are the biggest hurdles for their involvement with government, or is there anything that the government needs to be doing in educating those partners and making that transition more seamless?
So the question is, thinking about the acquisition process of the Space Force and the Air Force, working with startups, newer companies, what do those companies need to learn to work effectively with those customers, recognizing those customers' processes are imperfect?
I think I'll take a quick shot. There are, you know, people, like I've heard them refer to themselves as scouts, people who really understand the government acquisition process, who to talk to in AFRL or in the NASA centers. I think those folks, you know, should be sort of brought up to a higher level in terms of their ability to guide new founders into the, you know, the decision makers at that first level. Like who's the one that's going to identify the topics for an SBIR, STTRs, things like that. So it starting small and building from there, because once you win one of those and you get a contract, even an SBIR, it's a mechanism that more money can be added to in the future. So I think that's really important. So.
I live in California, but I was back here 2 weeks ago at the Pentagon for a roundtable, a wonderful roundtable with the Assistant Secretary of the Air Force, Mr. Andrew Hunter, and General Cameron Holt, who I actually think retired last week, or is no longer General Cameron Holt. And it was this wonderful conversation on this topic. How can the Air Force and the Space Force better work with startups in Silicon Valley? And I'm going to switch your question in terms of what can the government do better with startups? Because one, startups really do need a healthy blend of government and commercial. Why is that? Commercial, once you find your go-to-market, you know how much you need to spend in sales and marketing to get your revenue. With government, it is this black box. It is bumpy, lumpy, unpredictable, but really large with really great margins. So thank you so much. Now, to answer the reverse, One of the largest things is the feedback cycle. It takes, 12 to 18 months to get these contracts when startups only have funding for 12 to 18 months from me. They need to go to me every year and a half or so to get another round of funding. And if that's the feedback cycle to get customers, strong customers with the government, it's simply too long. There are wonderful mechanisms that Rob mentioned, like SBIRs and the phase 1, direct to phase 2, and then the StratFi, and wonderful. Continuing those, but speeding them up, making the process to get through quicker, and ideally some sort of, and it doesn't even need to be a program of record, but recurring mechanism. Don't get me wrong, I love non-dilutive grant funding, even if it's $500,000, but recurring over multiple years is even better.
Thank you so much. I would like to thank all of you for being part of this today. Please join me in thanking our panelists for being here today. I'd like to take one moment to acknowledge a couple of folks. First, I want to acknowledge Yasmin Almond, who makes this event happen as the executive director of Future Space Leaders, spends time and energy and effort to make this process go smoothly for everyone, and does it quietly and brilliantly. So thank you, Yasmin. And I started by saying how much I enjoy these events. It is such a pleasure to engage with ambitious and successful young professionals through mechanisms such as Future Space Leaders, which I've been part of from the beginning, and the various fellowships that we have represented here. Two people have really made this happen. So many of us and so many of the people in this room and others have supported and participated, but two people, in my experience, that I'm proud to call friends, had the vision to say, we should do something more. One of those is Clay Morey, who made Future Space Leaders happen. And the other is Lori Garver, who created the Brooke Owens Fellowship. And it was Brooke's birthday on Monday. Every year when this happens, I'm so delighted that that fellowship is part of this event and that I get to be part of it. So thank you all for being here, and thank you to you both for making this possible. Thanks.
Great. Thank you, Carissa. Thank you all to your panelists as well. It was a wonderful introduction to a very important and timely topic. And so thank you for running such a great conversation.